Right, guys, been promising a lot of people to do an overview video of the lab model, and we are working on a PDF, so this is a bit of a stopgap between now and then. But in essence, what the lab model is it's a model that we have developed that appears every day in the market. It's an MMXM, so what it's looking for is it's looking for to grab retraces and the continuation pattern from most MMXMs. So there's a couple of ways that it's appeared today alone, and we haven't actively taken the trades. Me personally, I've had a lot going on, but we called them out live in the live stream, and also there's one that's kind of ongoing now. I've just deleted most of it, so what I'll do is I will delete everything from the trades from the charts from this afternoon, this morning. So we've come on. We've come online. We were currently in this movement down. I'm deleting all of these. Sorry. So we had a liquidity grab, a manipulation from news, and a big move down. So standard deviation from there. If you haven't, by the way, if any of these things aren't clear, please ask questions. So standard deviation, typically what we're looking for is we're looking for an area where liquidity has grabbed price or filled an inefficiency and then moves to the downside. So in this instance, we've marked standard deviation from here to here. We've got our reversal zone, which is the zone between -2 and -4. These are the settings for the standard deviation tool that I use. So around -2 to 2.5, the logic is that price will extend to -2, -2.5, and then travel back up into a discount. And typically what we are looking for is we are looking to grab the trade from -2, -2.5 to the discounted area. And that is the trade that we take, because at that point, price can either reverse to the downside or it can pull back into a more local premium discount and then reverse and then continue back onto the upside. So it's basically a model that allows you to trade a small piece of the market every single day. It appears on all time frames, higher, lower, the lot. Typically, we trade it on a lower time frame, so we're talking 5 minutes to 1 minute. The reality is that the trade here that appears here, the actual model trade, there were a couple here, but we got no follow through to discount. The one that actually did follow through is actually news driven. So it's not actually a trade that a lot of people were able to take, and basically that trade looks a bit like this, really, realistically. Something like this, back up to this. So it's a big move, but it's not, you have to risk quite a lot. So ignoring that and just trading it from a local, 9:30 comes in the 9:30 approaches the market, and then we look to trade it. Typically we look to trade this in New York session. It does appear in London some days. But as a general rule, we look to trade it in New York. So anyway, news comes online, grabs liquidity to the downside. I don't need to go over this entire move, but basically this is all just an accumulation move. This is manipulation, and now we're distributing higher. So that move lower, we can mark the standard deviation out from that, right? So that gives us our reversal zone. So we have our -2 to -2.5. So again, this is the area where we are looking for price to trade away from, right? Where are we looking to trade it to? Mark the current low to the current high. The low typically is always the low or the high of the standard deviation. Low if the standard deviation is marking higher. Low if the high if the standard deviation is marking lower. So we can set our premium discount. So we have two things. We have premium discount of the range that we're currently in, the 1 to from between 1 and -2.5. That's not a rule. Basically, this could go all the way up here. As long as it doesn't go to -3, basically, we are framing shorts here. So we're looking for shorts. And where are we looking for shorts to? Back down to this discounted area. So what are we looking for? We're looking for SMT. That is our trigger for shorts. So we're waiting for SMT. I could give you the long and short boring answer to this. There's the SMT that appears on this time frame is here. So it looks like this. So that SMT there, basically what has happened is ES took liquidity. As you can see here, the high of this candle is 5220.05, and that's the high of this candle as well. So liquidity, that any stops that were buried at the top of that candle have been ran. So that is the SMT. SMT here, price made a lower high. So that is the SMT, right? When we, I'm just gonna go to the replay tool here. At this point, there aren't many imbalances. So there are a couple of imbalances here, but it's your job to find the imbalance that you're going to trade out of, right? I personally think that the 5-minute imbalance is the best imbalance from an inversion perspective. It's not actually the imbalance that I charted live, because it just wasn't. But we do actually invert this imbalance before the SMT is created. So what I want to highlight is that you can invert an imbalance, but you will not trade that imbalance until the SMT is created. Once the SMT is created, your entry then becomes that inversion of that imbalance. So you have to wait for that imbalance to be inverted again. So in this instance, we invert it, right? On a 5-minute chart, we already have inverted it. So we've got closes below. So that's our first signal of bearish structure. That's a good sign. And now we're looking for our trigger for our entry to our shorts as the SMT. We get SMT, we get a closure below the imbalance, right? Fine, we wick to the downside. What we're waiting for is we're waiting for price to then close below the imbalance again. And our trade will simply be the limit order. You can mark it, it's up to you. I've back tested, and a lot of people have back tested shorts. Limits, not shorts. So we back tested shorts. And then basically the logic of it is that it's the first logical low in a discount. When there is no logical low in a discount, the discount becomes your logical low, because that's the area that we want to trade into. Typically, if there was a wick on a 1-minute chart down here and then we got a big spike, this would be your first logical low in a discount. So that for me is the trade that the model trade that appeared. This SMT, you always bury it above here. Why? Because if price was to invalidate this, the framing of SMT becomes invalidated. So does the trade. So at that point, we wait for the 5-minute candle to close below, and we take the trade and we take it to a discount. This was a bit of a nerve-wracking trade because price quite literally came within a tick of our stop loss. If you're trading CFDs, you need to account for slippage. On futures, typically you are okay if the wick doesn't touch there, the order isn't executed. You will get slipped on entry and exit, but that's about it. There is no rule around going break even on this. It's basically as much as you want to or don't want to. This was the actual trade that we charted live. So because there is also SMT here. So there's also SMT here. And we actually charted this trade live with the same stop. Basically, I didn't spot the 5-minute imbalance. And this was the trade that we actually ended up taking live. It's still a 2R trade, 1.8R. But as you can see, basically price messes around for a little while and actually goes back up to basically our stop loss, to the point of it comes within a tick of our stop loss again. You can see that we were still in this trade. And then finally price continues on to the downside. Okay, so the lab model trade netted you about 6.5R. Still, it was about 300 ticks, and we still grabbed about 226 ticks using the trade that we actually charted live. Basically, I was doing something else. I was only on the 1 minute, and that was the trade that we spotted on the 1 minute. If I was cycling time frames, because I wasn't actively trading today, it wasn't something that I was looking to grab. So we've reached discount. So there's the continuation trade. So there's two trades. There's a reversal trade and there's a continuation trade. The continuation trade can only be taken after a reversal trade. So most of our trades are basically what you've just seen. Price traveling to -2, -2.5, and then we're framing SMT. We're looking for an inversion. We're trading the inversion with the invalidation above our SMT, and we're trading to a discount. That's it. It appears every day. It's all you need. It will 100% appear. It's your job to find it in the market. So we then have a continuation trade, right? So the continuation trade in the market is you utilizing the same premium standard deviation. So this standard deviation will basically come into, it will be live and active in the market until the low or -4 has been taken. There's a reason we have -2 to -2.5, and we have -3, -3.5, and -4. So if this was to expand all the way up to here, this trade would have been active and we would be looking to frame SMT. If price expands past -3, the likelihood is that price is most likely going to expand to -4 before doing anything else. So at -3, the reversal trade here becomes invalidated, and we look to frame reversal trades here. Exactly the same logic, and we always frame the reversal trades at two places in the market: -2, -2.5, and -4. They are always the areas that we look to frame our reversal trades. So by that logic, we are able to go to -2, -2.5, retrace, and continue to -4. That is the logic of standard deviations that most people do use. And the model that we have engineered actually allows us to trade that when it's given to us. So -2, -2.5, we trade down into a discount. Now, as a general rule, we don't really care what price does. We wait for price to typically show us what it wants to do. So again, we look to frame SMT. So what we're looking for is we're looking for price to basically make a low on one pair against the other. We only frame SMT with ES. I don't care what OIM does. It's irrelevant. So you will see here that price ends up trading lower, very, very small time frame, by the way, and higher. So let's just zoom into these. So this candle here, which is being highlighted on my chart here, is the low on NQ, and the next candle is the low on ES. So what that's showing is there's some manipulation between the two at a discount. That's not the only trigger, but that's your invalidation for any trades that you might look to take here, right? What are we looking for? We're looking for SMT from a reversal perspective. We're looking for SMT, and we're looking for an imbalance to be inverted. So let's just frame the imbalances from an inversion perspective, and I'll show you the one that I actually would take. You can take this on any time frame. The higher the time frame, the more probability. That's something you need to understand. So we've had no closure above a 1 minute, still no closure, still no closure. It's always important to note that when we get a closure like this isn't something I would deem a closure. It needs to be a tick above. My little trick that I always say to everyone is if you hover over the candle, the open, high, and close information here, what you're looking for is the low of this candle, so the L, that is 18,209.50, and you're looking for the close of this candle, which is 18,209.50. So that is not a inversion, that is a basically a equal to. There's no phrase, but it's just basically not an inversion. You then get the close above. So as an actual rule, you could have taken this trade here. Again, this is not a trade that I have or did or suggested anybody to take. 145 ticks is quite a large stop, and the reality is that you're probably wanting to take the trade up to here, or at least up to this -4 level, right? You can take partials as much as you want. My rule is stop loss, take profit. That is typically what it is. Occasionally I'll move to break even if there's news, or if there's, a bunch of other stuff. As a general rule, I don't trade. I don't go break even unless we are deep into a profit, or I'm trailing, or lunch hour macro, etc., etc. So this is a trade you could have taken. However, again, like I said, the higher the time frame, the more likely. So typically what I like to do is, from a reversal trade, is I like to look for a 3, a 5, a 15-minute imbalance. So we actually end up getting a, basically strong close above a 5-minute imbalance down here. So you could look to trade the 5-minute imbalance. So I'm just going to delete this and move the 5-minute imbalance to here. That's quite a small imbalance. They are still the same probability, and at the end of the day, your stop loss is still the same. So for me, that is a trade that I probably wouldn't look to take. However, you basically have a 15-minute inversion that is also printing at the same time. So you get the 15-minute inversion that prints, and that 15-minute inversion is likely to be strong, right? So by this logic, you can take this trade. It's quite a large stop loss, but there are also, I'm actually fairly confident, there is SMT that ends up appearing along the way. Where is it? But you could basically frame any SMT from this move. Typically, as a general rule, when we're trading large, higher time frame inversions, I like to just bury my stop loss under the inversion, under the candle that prints the inversion. You could get in a lower time frame trade from the SMT down here. The reason we like to take lower time frame trades, because the earlier you spot the model, the smaller your stop loss, the less risk you're able to take, right? Or the less risk you have to take, not able. But as a general rule, this inversion here for me is the trade. Burying it under some people bury it under the inversion, some people bury it under here. But as a general rule, when I like to use 15-minute inversions, or if my stop loss is going to be bigger than 200 ticks, because that's quite a lot, one mini on NASDAQ, you're talking about $1,000 loss. If I've got the drawdown, I'll play with it. If not, I won't. And this is the trade that basically I suggested to everybody in the live that we were looking at. We got a large expansion. We basically bottom ticked the market, so we never really got into any drawdown. Would I be break even after 300 ticks? I probably would. So my trade would be here, and my take profit would be here, and that would be the continuation trade, allowing us to extend to -4. Once we get to -4, we look for reversal trades. We're able to move. So this premium discount has been efficiently traded, so that premium discount is no longer valid. So what we'd be looking for now is that this becomes the premium discount. So we'd be framing reversals from here down to here. It's not a winner every day. It's not, and that's the reality, is that you are able to take losses, and on a smaller time frame, you can end up taking a loss and the model still be valid because it prints another SMT, etc., etc. That is just part of the fight that allows you to be a trader. If a model was completely system driven, then and it printed money every single day, everyone would be a millionaire. There is some element to this that enables you to be better than somebody else at it by spotting a better trade or a higher probability trade. But I would just absolutely implore you all to back test this model. We have a PDF coming out on it that is very, very detailed around what the do's and don'ts of the market. But as a general rule, what you're looking for is you're looking to efficiently trade the distribution legs into each market. So as we are aware, price trades from premium to discount all of the time. And what we're looking to do is we're just looking to grab that move from the reversal zone back into a discount, and then the continuation trade. Not necessarily that you have to trade every single one that appears, but as a general rule, the reversal trade is the one that's the best. And if price is looking really bullish, you're able to just grab a trade, and once price moves away from your entry, you can then look to trade, look to go break even. Some general rules: you can trade, you can compound, you can do absolutely anything as you wish. What I've just shown you is the model, how we trade it. There aren't rules around going break even. Like I said, moving your stop loss. Your TP is very static in terms of -4. Discount, they're the two TPs that you will always have. Discount, price can always move away. You have to wait for the inversion, the SMT, to trigger your trade. Once you trade through an imbalance and create that inversion, or trade through an imbalance that was the inverted previously, that becomes your trigger for the trade. I may have missed some stuff. This is a 20-minute long video. This model is something that we've refined over months. And as a general rule, I trade this every day. It's basically all I trade now. A couple of guys inside the Discord have done some extensive back testing that's netted some very, very decent results. That will be that I will ensure is in the PDF. But at the moment, this is the blueprint for the lab model, and this is what we trade every day. A bunch of us trade it. A bunch of us are always looking for it. If you have any questions, you have any doubts, or you want us to go over a specific concept, please just let us know. This video is strictly for the Discord only. Please do not share the link, the copy of this anywhere. As much as we want people to trade the model, we do want to foster a community and a family around the lab community and the model that we've developed as a community. So appreciate every one of you. And like I said, if you've got any questions around the model, please just ping me, ping anybody that you see talking about it. If that person doesn't know the answers to the question, please approach me, ask me, raise a ticket, ping me, do it, anything as you wish, and I'll get back to you. Ciao.